Imagine this. You finally decide to buy Bitcoin. You've watched a couple videos. Your friends won't stop bragging about how they totally knew it was going to pump. And after months of saying you'll look into it, you actually do it. You hit that buy button. And 2 days later, Bitcoin dumps 12%. And suddenly, you're questioning every life decision you've ever made. If that sounds familiar, or if you want to avoid that exact horror story, then this video is for you. Because today we're talking about the top mistakes beginners make with Bitcoin, and some of them are so common that even experienced investors still fall for them. So if you want to save money, stress, and unnecessary gray hairs, stick around. Let's start with the first big mistake, and maybe the most painful one, assuming Bitcoin only goes up. A lot of beginners discover Bitcoin through headlines, and headlines always look like this magical rocket going to the moon every few months. What you don't see in those headlines are the moments when Bitcoin drops 60% in a year, or when people panic sell at the exact bottom because they didn't understand how volatile the crypto market is. Bitcoin has historically moved in cycles, big uptrends called bull markets, and long, slow winters called bear markets. Beginners love to buy during the hype, when their friends are talking about it, when TikTokers are flexing their portfolios, when everything is green and life feels great. But that's often the worst moment to buy. Then, the moment things start dipping, beginners freak out, think the world is ending, and sell, right before it recovers. It's almost a tradition at this point. The important lesson is this: Bitcoin doesn't move in a straight line. It's more like a roller coaster, exciting, fun, sometimes terrifying, but only scary if you get off at the wrong time. Understanding volatility from day one will save you from a lot of regret. Another huge mistake beginners make is leaving all their Bitcoin on an exchange. And look, I get it. Exchanges are convenient. You download the app, create an account, buy Bitcoin, and boom, you're a crypto investor. But that convenience comes with major risk. Exchanges get hacked, companies freeze withdrawals, governments step in, accounts randomly get flagged and locked, and suddenly, you don't have access to your own Bitcoin anymore. That's why there's a famous phrase, not your keys, not your coins. If you don't control the private keys to your Bitcoin wallet, then technically the Bitcoin isn't really yours. It's basically like parking your car in someone else's garage and hoping they don't change the locks. The safer method is to move your Bitcoin into a proper wallet, either a hot wallet on your phone, or even better for long-term storage, a hardware wallet. And no, you don't need to be a tech genius to use one. If you can plug in a USB stick, you can use a hardware wallet. The point is simple. Exchanges are for trading, wallets are for owning. Beginners usually learn that the hard way, but you won't have to. Now, one of the biggest silent killers of crypto portfolios is something most beginners don't even think about: not having a plan. When people buy Bitcoin without a plan, what they usually do is the emotional investor version of improv comedy, just making things up as they go. One day they're saying, "I'm holding this for 10 years." And the next day they're selling everything because Bitcoin dropped 5% and someone on Twitter said it's going to zero. That's not investing. That's panic with extra steps. Before buying Bitcoin, you should know exactly how much money you're willing to invest, how long you're willing to hold, and how you plan to handle dips. Many beginners invest money they can't afford to lose, and that creates emotional pressure. Suddenly, every price drop feels like the end of the world, and every price rise gives you FOMO that you should have invested more. A simple strategy beginners can use is DCA, dollar cost averaging. It basically means you invest a small amount consistently over time instead of trying to time the market. It removes the stress of wondering if now is the perfect moment to buy. Spoiler alert, there is no perfect moment. There's only consistency. Having a plan is what turns beginners into long-term investors. Another thing that confuses beginners is thinking Bitcoin is the same as the thousands of altcoins out there. They're all crypto, right? Same thing, just different logos? Not even close. Bitcoin is the oldest, most decentralized, most secure cryptocurrency. It has thousands of independent nodes, a decade-plus history, and the strongest track record of all crypto assets. Altcoins, on the other hand, can be anything from useful technology projects to straight-up jokes. And beginners often fall into the trap of thinking a cheap coin is a better deal because it costs 20 cents instead of tens of thousands of dollars. But price doesn't matter, market cap does. A coin can be cheap because it has billions of tokens. Just because something is cheap doesn't mean it's undervalued. A banana for 40 cents is normal. A banana for 5 cents probably means it's about a day away from becoming pudding. Many beginners jump into altcoins expecting them to outperform Bitcoin, but they don't understand the risks. Smaller market caps, lower liquidity, teams that disappear, projects that fail, or coins that get delisted. Bitcoin is considered the safest asset in crypto for a reason. You don't have to avoid altcoins, but as a beginner, you should understand the difference. Bitcoin is a long-term, highly secure digital asset. Altcoins are more like lottery tickets. Some win, many don't. Another classic mistake, thinking Bitcoin is a get-rich-quick scheme. This one might be the most dangerous. Crypto attracts people who want fast money, and Bitcoin is often marketed by hype influencers as the holy grail of easy wealth. But Bitcoin is not a tool to get rich overnight. It's a long-term asset designed to preserve value and grow slowly over time. Yes, some people got rich quickly because they bought early and held for years, not because they bought in 2024 and waited a week. Beginners who expect instant gains usually end up chasing pumps, buying high, selling low, and losing money. The mindset should be, Bitcoin is a marathon, not a sprint. It's more like planting a tree than playing the lottery. Sure, the price can move fast sometimes, but real success comes from patience and discipline, not hype. If you understand that from the beginning, you're already ahead of most new investors. Another mistake beginners make is not doing any research at all. Some people buy Bitcoin because a friend mentioned it at a party, or because they saw a TikTok of someone saying, "Buy now or regret forever." Buying Bitcoin without understanding what it is like buying a horse because you saw it on Instagram. It sounds cool until you realize you have no idea how to take care of it. Beginners should at least understand the basics: what Bitcoin is, how the blockchain works, what decentralization means, how wallets work, what fees are, and why Bitcoin was created in the first place. You don't need a PhD, just enough knowledge to not get manipulated by hype. Research doesn't have to be boring. Watch videos like this one, read simple articles, and learn at your own pace. The more you know, the better your decisions become. Security mistakes are another big issue. Many beginners don't use two-factor authentication. They use weak passwords, or they fall for phishing emails that look like they came from an exchange. Crypto is digital money, and digital money needs digital security. Scammers love beginners because beginners are easy to trick. They'll pretend to be support staff, send fake links, offer guaranteed returns, or try to make you reveal your recovery phrase. Quick tip: no one legitimate will ever ask for your seed phrase, ever. If someone asks, run. If a website asks, close it. If your cousin's barber tells you to put your seed phrase into a profitable AI bot, call the police. Protect your accounts, use strong passwords, and never share your keys. Another common beginner mistake is confusing short-term price noise with long-term fundamentals. Bitcoin's price goes up and down all day, every day. If you stare at the chart too much, you'll think something dramatic is happening every hour. Beginners often panic when Bitcoin drops a little bit or get overly excited when it rises a little. But long-term investors look at things like adoption, network security, regulation, and the global economy. If you zoom out, Bitcoin's long-term trend is much clearer. The mistake is zooming in too much. It's like looking at someone's heartbeat monitor and thinking they're dying every time the line goes down. Relax, breathe, zoom out. And finally, the most underrated mistake: most beginners never even write down their plan. They don't set clear goals. Before buying Bitcoin, ask yourself, why am I buying this? For long-term investment? For savings? For speculation? For fun? All reasons are fine, but your strategy has to match your purpose. Once your purpose is clear, your decisions become clearer too.